So if we just go through high level what we're going to cover today, we're going to look at how Solana staking rewards work, the different types of rewards, our infrastructure and our philosophy and what we've seen in the first quarter, and some of the second quarter on Solana staking, Alpenglow, what is it, and what does it mean for you? And then we'll open it up to Q&A and to dig into any of these topics in more detail or any other questions that we haven't previously covered. Just a quick reminder that today is a Chatham House Rules session, so we will not be sharing this outside of the group here, but we are fully open to questions which can be anonymous if you would prefer. And yeah, with that, let's get started. David, Nick, I'll hand it over to you.
Thank you, Eva. Let me start somewhere maybe unexpected. We work with a lot of institutional delegators, and they send us a due diligence questionnaire asking us sometimes on 80 pages what we do and who we are. We go into real depth on each one, and we try to demonstrate our track record, our operational history, risk framework, our audit reports, the whole package. If I had to compress all of that into 2 slides you're about to see, kind of the executive summary, this would be the 2. The slide is a track record of where we were as a Solana validator. I'm going to walk you through this one, and the next one is going to show you our scale. We've deployed a Genesis block Solana validator in 2020. So in other words, we are pretty much a day zero public operator on Solana chain. We've been running our public validator continuously from mainnet launch through all the events, outages on the mainnet, through the different markets with the same team and discipline. In 2023, we were pretty early into JITO maximum extractable value. The bundle market itself wasn't really fully formed, but the architecture made total sense, and we've integrated before it was the standard. In 2025, that was the year marking our migration to Franken-Denser. We were one of the first institutional operators using it when Jump shipped a hybrid client, with us being ahead of the curve. And in the March of this year, we've switched over to Recurai client, or Recurai scheduler within Agave. We placed a bet on a team that's been building one of the most intelligent schedulers on Solana. And in a few slides, we're going to examine it together with you. We're going to look at the results of our migration. Going forward, we are prepared for what's coming next later this year with Alpenglow. And today we're really excited to share what we know with you. Every one of those switches, we made them before was the consensus call. That's the deliberate framework driven by our protocol and product teams. And I'm going to show you how we run it. On the next slide, I'm going to demonstrate the scale. It's not a vanity metric. However, it's nice to demonstrate that it directly affects economic opportunities and delegator returns. The way Solana works is that under stake-weighted leader rotation, your share of stake is your share of block production opportunities. If you got 6% of staked SOL, you're going to be the slot leader about 6% of the time. So every basis point of stake is a proportional basis point of variable reward opportunity. Right now on Solana, though, it's only a handful of operators who have multiple billion-dollar validators. Figment runs Figment runs two of the top 5. And the Figment branded validator at number 2 has around 16 million SOL, to be precise, 15.7. With Ledger by Figment, our white label validator, we're looking at number 5 at 9.1 million. We're the only operator with 2 validators in the top 5, in other words. Combined, that's about 25 million SOL of stake running on Figment infrastructure, so roughly 6%. This weight is what lets us measure the impact of every infrastructure choice we run on the team, with every client, every scheduler, every networking change. It gives us true statistical confidence rather than guesswork. And scale is what makes the framework work. for us and our teams, which is the rest of the conversation today. And David will take us through the Solana rewards model next to set the tone for the framework discussion.
I think it's also important to highlight before we kick on to the Solana staking rewards that out of the top 5 that Nick just showed on screen, we are the only institutional staking provider, right? So of those top 5 validators, when you're thinking about a validator that would be used by the likes of the leading ETP providers like BlackRock, Grayscale, that would look at working with banks and have the framework to work with regulated institutions. The only institutional choice and the only provider aim to support regulated institutions of those top 5 is Figment. So I think that's another thing to I just wanted to point out there, Nick.
Thank you, Eva.
Yeah, great. Thanks, Nick and Eva, for sort of sharing that and framing and teeing up this portion of the discussion. I'll keep this rather brief, as our 3 components of Sol rewards are relatively well understood, and I'll just use this as a quick refresher for our audience. So, when we're looking at the 3 types of rewards on Solana, they break down to inflation rewards, MEV tips, and priority fees. It's really in the last 2 buckets where there's the most differentiation between validator operators. So inflation rewards, of course, these are the newly minted SOL for the Solana protocol issued to all validators proportional to their stake. It's predictable, has a declining schedule, roughly negative 15% disinflation rate annually, and every validator connected to the network, participating in consensus, voting on blocks, will earn roughly the same rate here. There is some single-digit basis point difference, but it is not where the majority of Nick and I's work is focused. The majority of our work is sort of focused on both the MEV tips out of the Jito bundles and auctions that are available, as well as through Harmonic. And these are, out of protocol payments, for arbitrageurs, traders to pay validators to land profitable transaction bundles. Priority fees instead are, looking at urgency and for user transactions to bid for faster inclusion. So essentially, it's a measure of how much and how urgent transactions are to land during high traffic periods on Solana itself. Sort of looking at the anatomy of a validator, and a lot of the work that we sort of cover from, I'd really like to point out that Nick and I really spend a lot of time doing the research, talking with these teams, testing, giving feedback, doing code review with our DevOps team, and really trying to figure out, what are the best options for our validators before we were to deploy them across Solana. But first, we'll be looking at the validator client and scheduler. This really is, for example, what led us to our decision to launch with Frankendancer and then to instead migrate over to Rakurai. But basically, the base software that participates in consensus produces blocks. Examples include Rakurai, Frankendancer, and the base Agave client. Next up comes sort of block building, or how validators prioritize and place transactions within the individual slots that they have. We, of course, have 4 slots within each leader window for a validator. And there are different strategies that are here. Some are within sort of target Solana Foundation bounds, and some validator operators and some block building strategies are far beyond that, and essentially are artificially creating extractable value that effectively goes away once Alpenglow launches in 2026. And then third would be our networking layer, and I'll go over this later on in our slide when I cover Double Zero and Block X routes BDN. But essentially, this is, our connection to the internet. So, how fast the latency is between 2 points in the earth, and also what the jitter is, or the variability in latency across 2 geographically distinct areas. So, on the validator client level, as I mentioned earlier, as our backup, we run Agave because the failover time is essentially just making sure that we're not missing any slots while we're failing over. So it could be anywhere from 1 to 10 minutes. And then Rakurai, after talking with their team, we believe has the most intelligent both scheduler as well as block building strategy that is aligned with the long-term health of Solana and also generates the most rewards for our delegators. So some of those block building strategies can include, sort of not only a conscientious choice from Figment to ensure that our own block times are within 400 milliseconds or less, but also, we look at streaming schedulers as the most efficient for the long-term health of the network and to also generate the most rewards for our delegators. By contrast, sort of extractive modes where we extend that block time, what we call slot lagging or timing games, while they exist, we believe will structurally be eliminated when Alpenglow is released in the Q3, Q4 of 2026. And then finally, the networking layer, which I'll get into more detail towards the end of our presentation. We run 00, which is a private networking layer purpose-built for blockchains or any distributed system, as well as connections to BlockXRoute's purpose-built BDN network. The alternatives, which are always a fallback, is of course to connect to any networking ISP or data, essentially internet, at any of our data centers that we're located in.
David, as listeners are kind of hearing about how we think about the different schedulers, block building, 00, no 00, how often, if you could just pop back to that last slide quickly, how often are you and Nick looking at this? Like, as you think about the validator clients that we're using, the scheduler, the block building, how is this just a once a year review, or how do you think about these types of decisions?
I'm glad you asked. I'm glad you asked, because it is very much a sort of constant evaluation. So whether that's talking directly with Onza Labs that produces and maintains Agave, the vanilla client, the Jump crypto team who maintains Frankendancer, Firedancer, the Jito Labs team with regards to changes to MEV or direct contact with the Rakurai team, it's pretty much every other day. So, whether that's sort of a performance evaluations, performance reviews of the rewards that are generated, whether that's new upcoming changes or feedback that we'd like to give the team from our own perspective, that's definitely something that's not only ongoing, but is quite constant as well. And sort of looking at the horizon of not only what's next, but also to ensure that if we're going to deploy anything, not only are we 100% secure in both the security of the new client, but then also, of course, that it generates more rewards than what we've currently decided to use as well.
It's a continual review process, right? A continual analysis to make sure that our setup is most optimal, and also it is the right choice from a risk perspective. I guess the analogy that I like to use is it's like kind of having an F1 car and constantly thinking, what is the most optimal setup for race day, whether that's the certain components of the weight of the car, or whether that's the new fuel offering that's on the market. What is the best setup for our validator will constantly be something that yourself and Nick are assessing and reviewing as things change. And what's right today might not be the right setup tomorrow. So we'll constantly keep updating that. I think that's the fair summary, David, would you say?
Absolutely.
Thank you. And I do remind everyone that please do drop in any questions if you want to interject with any questions on anything that David and Nick are taking us through right now. Alternatively, we can cover them at the end.
Brings us to a discussion about Solana philosophy overall and our infrastructure choices. As David mentioned, it's a competitive environment, and it's great to have every team in the shared Slack space. So the ongoing topic, the ongoing question, we try to answer, and every other validator is answering for themselves, is how do you deliver maximum performance on Solana without compromising security and network health? So every validator is answering this question, and some validators choose to maximize their returns by relying on loopholes that are about to close. And the deadline for that is Alpenglow, which I'll walk you through in about like 10 minutes. So some other validators would compromise chain health by censoring transaction order flow, delaying price updates, filtering trades. In other words, deterring economic agents away from chain and eroding its value. So with great stake comes great responsibility, and operators of our scale, they need to answer this question carefully on an ongoing basis. And as Eva mentioned, it's an continuous optimization. It's not one and done. On the next slide, it's a bit backed. I'm going to walk you through this decision on picking the instruments from the same toolbox and how Solana validators continuously tweak their inventory. So why does one validator beat another by 10, 20, 30 basis points consistently? It's execution and discipline. We constantly evaluate geographies. Some G2 block engines outperform each other in different math climates. So we constantly track all the block engine endpoints and the return rates across epochs. We tweak configuration parameters, we switch clients, we monitor performance overall, and we revert all the time when things go wrong. So some other validators don't. And that's the primary structural edge we have and many other validators. But I think in our case, what makes us different, you're about to see on the next slide soon, but let's stop here for a second. So since Solana evolves constantly, it's important to understand what affects performance and what one should look at the validator toolbox closer. The top of the stack is the essential part, with uptime and voting and block production, or the reverse metric is skip rate, how often you skip your blocks. It's being the primary focus here. It's being affected by hardware, key management, operations, networking. It all affects inflation capture, which is about 80% of your SOL yield. And if you don't get this right, none of the rest matters. The next layer is MAV. We constantly evaluate where the current economic sentiment is. Is the order flow value in the current climate? Is it captured more by Jito or Harmonic? Is it more leaning towards priority fees, auction, or is it private order flow relationships? And trust us, we see everything from on-chain data, and we spend hours looking at different sources. So that's what we do, and we're evaluating like per block revenue opportunities on that level. But all of that is highly influenced by the scheduling strategy, which you see on the next level, how and where G2 bundles land, how transactions are ordered within the block, whether it's frequent auctioning, first in, first out approach, and what's the degree of delays the network can handle in current trading climate. That's where MEV and priority fees revenue shows up the most. We constantly track where our validators land in this landscape. And the last piece of this toolbox, or last instrument, is stability. I think it deserves a separate focus. I'll give you an analogy of a logistics business which doesn't rely on the fastest cars that need servicing every 100 miles. It would buy the truck with the 1,000,000-mile durability record. The economics for stability aren't in the top speed, they're in the never breaking down. And in this aspect, it's important to focus on failover, which is the same idea. We won't sacrifice failover speed for upside. That's a hard line. And here's the thing I want to re-emphasize. The infrastructure decisions are not one and done. We don't pick a stack on Monday and run it for 2 years. We reevaluate every dimension on the table against live data, peer benchmarks. And the next slide is what it actually looks like in practice. In practice, for Figment, it all starts with identifying a measurable uplift. If we can't put together a napkin math over real rewards rate improvements using peer validators, benchmarks, and our own backtests, we won't even start the due diligence document. We also isolate timing games effects. That's a new term, and David is going to show you how it works in like a few slides. But long story short, we will not consider a tool that promises to deliver revenue that depends on extending the slot past target 400 milliseconds or playing those games that are going to be eroded soon. We also examined the track record of failover and operational risk. Our current baseline is Agave. We perform thorough code reviews. We start on testnet and we graduate on mainnet, starting from smaller validators towards our Figment public validator. So we don't even run the new client until we've watched a smaller validator run it for weeks. We're also in the constant conversations with Solana Foundation on scheduler behavior. This is a new topic that is being scrutinized right now. And this relationship has been helping us and the chain to converge network and delegator interest. We deprioritize and scrutinize options that the foundation would push back on. And the last piece is for our white label customers, we ensure stake pool alignment, such as Solana Foundation Delegation Program, Double Zero, and others. We won't make a switch that puts those at risk. So one of the tangible results of this framework is our recent Rackroi migration on March 2nd of this year. This brought us 32 basis points improvement on our staking rewards rate on top of our existing stack. We ran it on testnet with smaller white label validators. Then we moved to a public validator. That's a deliberate framework execution, and David will walk you through now the alternatives of how some other validators will do it.
Thank you, Nick. I think, for the audience, this is maybe something you're not necessarily as aware of when it comes to sort of scrutinizing how or what a block actually looks like and what the transactions actually look like within individual slots or blocks on Solana. So, on the screen, we have several different clients and validator operators running different validator clients, from Firedancer and the Harmonic team to Frankendancer to our own Rackroi. And, just pointing out that there are different ways to not only schedule transactions, but also the ways that they're scheduled within each slot, the way that they're placed within each slot, whether that be, evenly distributed and leading to more predictability and on-chain activity, or whether that be clustered in one area. Really can help or hinders and also incentivizes or disincentivizes user activity and therefore delegator rewards on Solana. So one of the reasons that we chose Rackroi as part of our current setup is their streaming scheduler, and decided not to use clients or schedulers from different teams. And I'll sort of demonstrate some of the reasons why very shortly.
David, what's the foundation's view on, I mean, broadly, as you know, you can't speak for the foundation themselves, but generally, can you share like what the foundation's view is of kind of these kinds of strategies?
Pretty awful for the long-term health of Solana, and disincentivizes on-chain activity, which makes Solana the best place to not only trade, but also to access different blockchains, and also materially sort of deteriorates the sort of advantages that Solana has, which are tighter spot pricing with prop AMMs or decentralized applications.
Yeah, I mean, for most people, the purpose of staking, right, is to secure the network, and because you want the health of the network to continue to grow, particularly around like transaction block timing for Solana. And so if you do something that is going to slow down the network and make it less secure, right, you are actually counterintuitive to the reason that you're staking in the first place, which is to secure the network. Would you say that's fair?
I'd say it's totally on track.
Yeah, I think that's why it goes against our intentions for supporting staking on Solana in the first place, to support any of this delay in block building, delay in transaction building. But please carry on.
No, appreciate you bringing that up, Eva. I think it's definitely a great way to sort of think about this overall, and sort of gives us some background. Looking at sort of Frankendancer, we'll notice that in pretty much all of these slots, there's huge portions of sort of completely dead activity where no transactions are landing, that's about 300 to 350 milliseconds of a 400 millisecond block. While this is happening, there's almost no transactions happening on chain. So this can cause massive issues for spot trading through prop AMMs, central limit order books, any perps platforms, potential prediction markets, and sort of make sure that no one is confident where their transactions will land. So we see these massive clusters of transactions throughout the block, and you'll see how this is contrasted later on with some of the other schedulers, including Rakurai. In addition, with Frankendancer in this particular scheduler mode, they've also chosen to sort of increase the overall slot times as well to sort of artificially create additional MEV opportunities, once again, that structurally go away once Alpenglow launches in 2026.
And so the gaps in between the purple, yellow, green, red lines, right, show a purposeful delay.
Essentially, nothing is happening on this time.
But is that because like nothing should be happening, or is this a delay with intent?
So this is very much the scheduler logic. So it's with intent, with the idea to artificially drive up either priority fees or MEV bundles because prices go stale in the meantime or detached from the real world, and once again artificially create MEV opportunities because once again prices are stale.
And intentionally slow down the network is the other result, right?
Very much so. And, as I mentioned a little bit earlier, Alpenglow with Alpenglow shipping, the sort of timing game profitability disappears entirely. Our approach with Rakurai is already sort of built for a Alpenglow world where we're looking at 150 millisecond finalization. So validators, in this world will pretty much need to fill up their slots as soon as they receive a transaction. We will not be able to have these sort of dead periods as sort of delaying these transactions will just mean that you skip your slot and therefore you skip all delegator rewards for that slot as well. Looking at another operator themselves, definitely a lot better in terms of how the transactions are sort of spaced throughout the slot. They're still not quite as evenly distributed as perfect, but it's certainly an improvement. And just here to highlight, looking at sort of that slot lagging or delaying of the sort of timing of the slot overall. And once again, that this structurally goes away once Alpenglow ships. And then finally, probably one of the more egregious versions, we're looking at significantly, over block building time, essentially not only harming, the overall network health itself, but very much making it very difficult to land transactions throughout this time. So really, causing issues for transactions landing within the same slot. If we look at these big gaps in between the slots themselves, these are not only delaying any transactions that come in, but also functionally makes it so that in these gaps, there's nothing to be done on the chain because the leader is just delaying their slots overall. Finally, looking at Rakurai, we think that of all the scheduling modes, streaming is probably the best overall, not only to balance the best rewards or maximizing delegator rewards, but also we've got very full blocks, very evenly distributed, consistent, predictable transaction landing for users. So whether that be, once again, for any prop AMMs, for any users just trading, whether that be central limit order books, they have predictability, and predictability is actually more important than speed in this context because they need to make sure that their transactions land, whether that be canceling orders or getting spot fills overall. So just really want to highlight here that Nick and I are trying to ensure that this is a Figment never participates in extractive block building, that we're looking at the best scheduler modes for delegated rewards, and that also we had to give this feedback to the Rakurai team. One of the pieces of feedback we gave is we wanted more predictable, more evenly distributed transactions throughout our slots. And the sort of scheduler mode you're seeing, the sort of transactions you're seeing within our slots are a direct result of that feedback and working with the team.
Yeah, let's take a look at the numbers. In first quarter of this year, we've delivered a total gross staking rewards rate of 6.81, with the network average being 6.70. That's for us, that's plus 11 basis points above the network. We also secured the position of the largest Solana validator by stake by the end of that quarter, right after our Requirite migration. And if we isolate just the inflation rewards and like look at the priority fees, returns on MEV rewards, our validators delivered 15% more than the network. And I want to spend a second on what that 11 basis point difference actually represents. Because if you're benchmarking us against the kind of validators David just showed you on the previous slides, you're probably missing something. The network average includes those extracted validators. They're pulling the average up. We're outperforming a network that's already inflated by the playbook we don't run currently. And we're doing it consistently. In May, we're looking at plus 7 basis points. It's a smaller gap, but it's in the same direction and it's consistent. And this is the key point for the rest of the conversation. When the extractive validators playbook stops working in about 6 months, that gap doesn't shrink. It widens because the average will drop even much lower and we're still ahead of it. And that would bring us to Alpenglow, and I'll pass it over to you, David, to cover that.
Thanks. I think, there's sort of a vision of, what Solana should be. And while we're not there yet, there's been meaningful advancements. And among them is sort of Alpenglow. So sort of looking forward to Alpenglow and beyond, Solana was very much built by, from this article and blog by Tolley and Mac Resnick of both the Solana Foundation, as well as one of the co-founders, was, Solana was really founded to sort of build a blockchain that's so fast and cheap, you can put a working clob on top of it. 5 years later, we have yet to succeed in this goal. Part of this, and you may have heard this before, is sort of looking at increasing bandwidth and reducing latency. Using a sort of highway analogy, bandwidth equals, Solana's chain transaction throughput, or adding additional lanes to the highway. Another approach to increase bandwidth is making the vehicles or transactions smaller on the highway. So, essentially you could paint more lanes on the highway and have more vehicles fit on the same space. Latency is instead something that, Alpenglow and their consensus change looks to address through finalization time reduction. And networking solutions like Double Zero, decrease latency between validators and the jitter or variability in latency when validators communicate across the network, and really helps, empower changes like Alpenglow to be as fast as possible for Solana. So an example of some of these changes that actually just happened was a change from the standard Solana program library, or SPL token. Every token on Solana that's not SOL was a SPL token. Those are now P tokens, and that was a migration that happened in Epoch 971. This results in about a 96% decrease in compute unit or gas usage for token transactions. So this effectively meant a 25x increase in the number of transactions that can fit within each block at current block limits, which is approximately 60 million compute units. There's now greater room for more fee-paying transactions per slot. And this essentially is that, making vehicles smaller on the highway so that we can fit more lanes within the highway itself. We've also just activated the Express Data Pathway, or XDP, on Figment 1 as of late May. This is a requirement to increase the overall block size to 100 million CUs. So we're looking at additional 40 million CUs per block. So once again, that's increasing the overall throughput. We're adding more lanes to the highway. Both of these things, once again, are increasing that throughput, increasing the bandwidth of Solana. Looking forward, we're also, the long-awaited SIMD 123 change for in-protocol priority fee sharing. What this seems to look like will be, validators charging a commission on priority fees instead of keeping them, sort of similar to what MEV and inflation commissions look like today. And all this means is more rewards for delegators overall for their stake on Solana and their stake with Figment. And then finally, we have sort of constellation. I think the best way to think about this is that validators right now on Solana have a monopoly on their leader window. They can say which transactions can go in and which cannot. This also means that that monopoly can lead to censorship and can also lead to extractive block building strategies. So what's most important about Constellation is it's not only breaking up that sort of single leader monopoly, but also allows Alpenglow to have much faster finalization and once again, essentially totally eliminates any of the timing games that we've talked about throughout this presentation.
Yeah, before we wrap up for our Q&A session, I just wanted to point out the most important takeaway from Alpenglow, like in the staking context, which is slot extension stops paying pretty much. Under Alpenglow, every validator measures a local timeout for each slot. So everyone's in the spotlight, everyone's scrutinized by others. And if a leader in the current sequence doesn't ship valid block before this timeout, the other validators, they won't wait. They're gonna vote to skip the block. And those skip votes under Alpenglow pay the exact same reward as block notarization votes. So there's zero economic incentive for honest validators to politely wait for a slow leader. They get paid the same either way. So if 60% of stake votes skip, the slot is skipped. And the extractive leader earns nothing. And if the first slot out of the 4-slot leader window triggers a skip, the validators will rapid skip the whole remaining 3. And right now, Anza is actually talking about limiting the whole sequence of those 4 slots right now to 2. This is a side topic. But the key takeaway, so one slow slot loses the leader for entire window. And some of the validators we saw at the slot X-ray view when David walked us through different ticks and the timelines, they're just gonna lose everything that they're validating in this slot. So this is the most important takeaway. The playing field is gonna level out a bit for all validators. There will be some extractive strategies within the block space, and we've seen this in our example, Galaxy backloading everything and putting it at the end of the slot, which is currently being examined by the Solana Foundation, and they're figuring it out. Eventually, it's going to get addressed by Constellation. But yeah, slot extension is going to stop paying. Then there are additional improvements with just making more space for applications by taking the votes out of block space, by improving the unit economics for validators, overall making it cheaper to run white label validators for more across the network. Where we are with this today. The testnet of Alpenglow was activated earlier this May, on May 11th. And we're looking at 6 to 9 months from now for the mainnet activation. And maybe that's going to go faster as we see more validators, including us, joining the Alpenglow testnet cluster. So to summarize, before and after Alpenglow on the next slide, so like sort of before and after view. David, if you could switch over to the next one. Yes, thank you. Today, where we are on the left is in the world of extractive strategies, with some validators delaying their block times, jamming everything into the last 60 milliseconds or 4th slot. Some validators get an extraction advantage with compromising the chain health and slipping the finality. On the right side, the world with Alpenglow released, the block delay is going to yield no uplift just because the slot gets skipped under the mechanism I just walked you through. So the infrastructure quality is going to become the main lever. 00 plus streaming scheduler plus no timing games is the structural edge that will survive the upgrade. And for us, we did not adjust to Alpenglow. As you can clearly see, our past ongoing efforts allowed us to be ready for it. So this upgrade simply confirmed the stack we already chose. And David is going to walk us through the how it looks like on the wire with 00.
So as I mentioned a little bit earlier within this presentation, 00 is purpose-built private internet for blockchains or any distributed system. So just pulling, a graphic from their own telemetry map. And we've kind of talked about, with Alpenglow for a slot or block to finalize, this will happen in about 80 to 150 milliseconds. So everyone votes in 2 rounds. The minimum time that could be is 40 milliseconds. The maximum amount of time this could be is 150 milliseconds. And so any delay over 150 milliseconds will skip your slot. They may have additional slots that are skipped. And once again, the skip slots are directly leading to missed delegator rewards. And if we're looking at the most congested corridor for Solana, so between Amsterdam and Frankfurt, about 56% of the network is running on 00. And between these 2 points, it's only taking approximately 5.5, 6 milliseconds for information to go between one validator to another within this corridor. So there's structurally no time to delay transactions. You will essentially be forced as a validator to very much sort of run a first in, first out strategy for under Alpenglow, because 00 latency and the latency jitter is so low, you'll be unable to delay those slots at all without risking losing the entirety of the rewards for that slot as finalization comes in.
I think that slide will be very familiar with it for anyone who's looked at or been involved in high frequency trading or FX trading, right? In the past, that kind of thinking of best execution and execution venue, right? Even though this is not a trade, right? This is a settlement of a staking transaction, right? But there's no trading as such. But I think that slide will resonate with a lot of people who've perhaps had a previous life in in trading or in FX. Thank you guys. That was really, really great. We talked about a lot there. The team took us through everything from how we think about our Solana setup, whether it be which Solana clients we're using, which schedulers we're using, the fact that we don't engage in timing games, how we revisit these structures, the fine-tuning of our race car, and how this is an ongoing assessment that the team continue to look at based on the latest information and the latest changes to the ecosystem. Also, we talked about what will change post Alpenglow and what Alpenglow means to our customers and to the industry as a whole. And now let's skip over to some questions. There's still time to add them. If you have any, you can either add it in the Q&A button or you can add it in the chat if you'd prefer. But let's go through some of the Q&A questions that we've received so far. I think the first one is around changes for Alpenglow. What should our attendees here and our customers be thinking about in terms of the latest upcoming Alpenglow updates? What do they need to do? What do they need to be aware of? Or is anything that would change on their side post the Alpenglow rollout?
Yeah, so luckily, we have a dedicated DevOps team, and Nick and myself, when we're looking at rolling out these upgrades, these come with any upgrade for a client itself. So Alpenglow is specific to Agave 4.1. And as soon as the network adopts that, I believe it's 50% of stake or so, it's essentially an active feature on the network. So for both Rakurai as well as Alpenglow, there is no change or any behavior change or actions that need to be taken as a delegator. We definitely, as we approach the deadline, will have more material and information should you want, but there's no material actions that are required on your end.
Thank you. Next question would be, if you are evaluating validators, say Nick, David, if you're looking at validators yourselves, or if you're one of our attendees to this call looking at validators, what would you look at? What would be the top criteria that you would focus on if you're looking at comparing Solana validators? We talked a lot today about how a lot aren't created equal. So how would you evaluate Solana validators?
I can take
Yes,
that one
go for it.
probably. Yeah, we're constantly using on-chain data and different sources like Trillium or fire density reports, and we start from the basics, looking at their voting efficiency and the skip rate to see how well they're capturing commoditized part of their revenue, which is inflation rewards. Then we look at their structural edge. If they show outperformance on priority fees and MEF, where does it come from? And this is a bit of an investigation work with us examining on the surface, it's their block time. If they're past 400 millisecond target, then it's evident. But sometimes things happen within the slot space. So we look at sandwich.me website that shows breakdown of the slot space and ticks. And we look at their strategy, like what game they're playing intra-block. How are they packing transactions? Are they using any kind of last minute delays? Are they using any kind of preferential order flows? We're also tracking transactional lending services originated transactions on circular FI dashboard, and we see if some of those validators might have some unspoken or private order flow deals. So that's how we kind of evaluate all different validators, and we see how it all looks like in the competitive space. But if we talk about different clients as a whole, we look at the distribution of rewards across validators running a specific client, and then we see if it's a persistent trend. That's how we were examining Rakurai, for example. The coefficient of variance was very low. And that kind of brought us confidence that this team is capable of delivering consistent rewards. And that's what's important for institutional delegators versus one-on, one-off kind of uptick in rewards. And then we're back to baseline. So yeah, that's kind of our process.
And I think the other option would be to kind of come to us and ask us to put this comparison together for you.
Yes.
We are well versed in RFPs, but also in general network analysis, whether you're looking at, the timing games piece or the breakdown of rewards per staking provider or any other considerations we would suggest to look at. We can help pull that information for you. And of course, you could request the same from others in the market to run a comparison. Next question. How should our customers think about liquidity on Solana, especially maybe if they're more familiar with Ethereum and the fluctuations of an entry and execute? How should they think about liquidity of their assets as they look to, say, stake Solana? Tomorrow it's Figment. How does that work in terms of having liquidity to that Solana?
Yeah, so I mean, Solana is very predictable when it comes to sort of unstaking your SOL. So, as a native stake overall, essentially you're looking at an absolute minimum of approximately 2 days and up to 4 days. So the process of deactivating and then withdrawing stake from a validator, of course, you hold the withdrawal authority. The only person that or entity that can withdraw SOL that is delegated to one of our validators, is the actual signing authority. So whether that be through your custodian or through your own self-custody, essentially it goes through a two-phase process. So, provided that the SOL is already active and earning rewards on our validator, you would first send an instruction to deactivate the stake. This deactivation window is 1 epoch, so approximately 48 hours on Solana. And then once that deactivation process is complete, once we've hit the next epoch, then you would hit the withdraw instruction. And so the withdraw instruction would allow you to withdraw that SOL back to your wallet or to your custodian's address. So at an absolute minimum, it doesn't matter when in the epoch you do it, whether at the beginning or the very end. It is very much a minimum of essentially 2 epochs, which can be realistically at absolute minimum 2 days. But the timing really doesn't matter overall. So 2 to 4 days is the best way to describe that.
Thanks, David. And now, final question for each of you. What is the most significant thing that has happened on the Solana network so far this year as it relates to stakers on the network? And what do you think will be the most significant change coming up in the next 6 to 12 months? So both backward looking and forward looking, what's kind of the biggest change you've seen so far this year? Maybe it's behavioral, maybe it's actually something that changed on the network itself, or and then additionally, what do you see as coming up in the next 6 to 12 months that will be a significant catalyst for a change on the Solana network? I don't know who wants to go first with that one.
I would say looking backwards, probably the rise of proprietary automated market makers or prop AMMs on Solana, pretty much consistently providing the tightest, round trip spreads across centralized exchanges or decentralized exchanges. So I've actually written a few articles on prop AMMs. You're welcome to read the background there. But essentially, the best trading platform with the tightest spreads and the best spot liquidity is no longer an exchange like Binance or any exotic exchange, we'll call it. The round trip cost is less than 4 basis points on up to, I believe, $10 million right now for SOL USDC. So that's probably been the biggest rise and has driven a lot of volume and made Solana probably the best place to trade, well, at least SOL USDC specifically, on any blockchain or any exchange overall. I guess looking forward, it's just Alpenglow. Alpenglow's coming. It's going to change things.
Fair answer. Fair answer. Nick, what about you? What are your thoughts on this?
I second that. Prop AMMs definitely changed the rules of the game. I'm excited to see what the market liquidity and trading experience will look like when the playing field is going to level out a bit with Alpenglow. And yeah, the quote that we saw, I'm really hopeful this long-term vision is going to play out well. And Alpenglow is just one building block. We mentioned Constellation. There are way more things ahead, and it's really exciting to be working in the trenches, sort of, and be very close with the ecosystem players and know what's going on.
Thank you. Yeah, I mean, I would add that the speed to market for some of the ETP providers has been one of the significant shifts of the last six or so months. Previously, we had seen asset managers focusing on ETH, right, and looking to launch ETH staking products. But the time that they have accelerated on their Solana products, their speed to market on Solana products has been surprising, but in a good way. And I think that's overall has been very, very positive for Solana. And we continue to see institutional demand and institutional focus, both for institutions building on Solana or looking to stake. With that, we are out of time. I would like to give a huge thank you to Nick and David. This was extremely helpful. I hope that everyone listening found it insightful. I would recommend that anyone who has further questions that we didn't get a chance to cover today, please do reach out to your contact here at Figment. We are happy to set up further deep dive sessions focusing on particular topics with Nick, David, and the rest of the Figment team. Or if you would look to have another conversation with other members of your organizations, please let us know. We're happy to share our knowledge and share our expertise. And as I said at the beginning, please do think of us as your outsourced Solana experts, amongst other things. But thank you to everyone for joining, and have a great day.
Thank you all.
Thank you.